The years of the classic VC pump and dumps are over. There is a new meta in town, and it unlocks the key to crazy gains in the crypto market. So in today's video, I'm going to be showing you the tokens that you should be avoiding and the tokens that you should be buying instead. I've put together a watch list in today's video to give you the exact tokens that fit into this new investing meta that I think are going to outperform the outdated VC pump and dump counterparts in the market. So before I get into the exact altcoins we're going to discuss in today's video and my theory surrounding the low float, high FDV predicament in crypto and my take on that situation, I want to quickly give you a market update because Bitcoin has actually made a positive thrust towards the range high zone at $68,000. We had this nice pivot off the lows at 60K on the weekly time frame. It's put in another consecutive green candle to close even higher in its bid to push up back towards its all-time high. From a price action perspective, this is quite positive. The main thing, however, I'm looking at from a weekly / macro perspective is how Bitcoin reacts to the range high region at 68K. What you do want to see is consolidation above this zone for an attempt at the 73K level. If any sort of deviation and then a bearish retest happens, you will look to be targeting the lower edge of the range again. So I'm just looking to see how Bitcoin responds in this region. But what about the altcoins? How are they looking? Well, a flag is starting to appear on Total 3, which I'm keeping a close eye on. You can see Total 3, which is the altcoin index excluding Bitcoin and Ethereum, has been making higher lows. You can see we set in the low here during that liquidation week down to $564 billion market cap. We see a higher low, another higher low, and now we are attempting the upper bound of this flag. Going to be interesting to see how Total 3 responds. If you do see a breakout here, that could be the positive momentum that is needed for a push up to its range high at 770. So lots to be excited about in the altcoin market. The market's starting to look better, and from a PA perspective, this is more positive. But when it comes to buying altcoins, what should you be looking at? Well, I'm going to get into exactly that in today's video because a new meta is in town in the crypto market, and I do believe we are seeing a paradigm shift in A, what outperforms in the market, but B, how tokens are actually going to start launching in the market. I think the discussions of this week are going to have massive repercussions on the market mid to long term. So this may be one of the most important videos that you watch from me. I'm not only going to be talking about alts, I'm also going to be giving you some of my alpha when it comes to analyzing tokenomics to make sure before you buy a token, it is a good trade with a high probability success rate. So I'm going to be giving you my favorite tools as well for doing this prior to buying. So if you do enjoy this type of content where I make sure you're early to the latest crypto trends and alpha, make sure you click that subscribe button down below and hit that post notification bell so you don't miss a single video. Members of the Noti Gang, let me know who you are in the comments below by commenting Noti Gang. And to all the members of my Discord community, congratulations on the past week. We've had some banger calls. This is my alpha channel where I post altcoin calls, picks, and I talk about the trends that I'm seeing in the market. I posted about Phantom before it went up 30%. I posted about Spectral the other day at $8.50. It's now pushing $12.50, so up 30%. WMT, we're also up 10 to 15%. And SGOAT, which is a Phantom meme beta play, I actually posted yesterday, and it's already up 20%. So that's just a sneak peek of what you do get in the Miles High Club with some of my exclusive alpha for members there. If you do want to join the club, there is a waitlist in the description below. We're only going to keep this waitlist live for another 5 days. So I'm uploading this video on Monday, the 20th. On Saturday, the 25th, we're going to close the waitlist, and that waitlist is going to be shut for at least another month. So if you do want to get in, now is the final chance. We are doing an intake of just 300 people. At the last time I checked, there was not very many slots left. So if you want a chance to be added to the group on the next intake in 5 days, make sure you go to that link in the description below and sign up for the waitlist if you're interested in being part of my exclusive community. It's not just me posting calls in there. We do have some of the best analysts and traders in the market. Fabian, who has an amazing macro read on the market. He also posts his small caps. We've got Doc, who in my opinion is one of the best high time frame traders, posting his setups, and Paradise, who posts his setups pretty much all day long in there. So we have a lot of alpha for members of the group. But let's move on to the discussion at hand. And the picture is essentially painted via the image that you can see in front of you. The image suggests that the performance of a lot of the newer low float, high FTV coins has been significantly underperforming since the time of their listing. You can see in front of you, these are the coins that have listed on Binance, and you can see the performance since listing and their associated backers on the right-hand column. And it paints a pretty damning picture for these new crypto launches. Pretty much all coins are more than 50, 60, 70% down since launch, except a few exceptions. Meme, Audi, Dupe/Jito, and Whiff. 2 are meme coins. 1 didn't even have any VCs on the cap table, and Jupiter and Jito were sol plays. And Solana is a very big narrative at the moment and has a strong community. And they also had their big airdrops earlier in the year, which, by the way, followers of my Jito airdrop guide ended up doing quite well off that one. But basically, it says that, look, most tokens that are launching are down. And what are the reasons for why they're down? Well, it's simple. There's a game. It's the VC game. And this game is basically engineered so the VCs and the early insiders and the early investors can extract as much possible value out of each investment possible. So what's been happening is the VCs get in at super low valuations, super attractive valuations from pre-seed, seed, Series A, Series B, etc. Then, when these tokens launch, they're incentivized to launch them as high as possible in FDV or fully diluted valuation terms. Why? That's so they can make as large of a multiple possible on their unlock at the time of token launch. But there is a problem here. The problem is tokens are launching too high, which doesn't allow for price discovery to happen in the open market. And what actually happens is a lot of VCs have now been offloading their positions via either liquid selling or OTCs if they do have a lockup in order to offload, which puts a lot of sell pressure on the market and basically means that a lot of these new launches end up being down only because there isn't enough leeway for growth when a token launches at $20, $30 billion FTV for the community to actually get in and profit off that. And this is essentially creating a new crop of tokens which are dead only from launch because retail can never buy in at an attractive price. We all know the best way to build a community is via having bag holders. And if bag holders are down, and if people can't even enter at an attractive price, you've got no chance of building a community. And long term, a lot of these projects will subsequently end up failing. So that's the high level summary of the current predicament that we're in with these low float, high FDV launches. But Cobie released an article yesterday, the legendary Cobie, who's famous from the 2017 days and even last bull run, one of the most legendary Twitter presences on CT. He posted a full breakdown of the issues in the market and why lots of these new coins are actually underperforming. This is an amazing article that I'm going to link in the description below if you do have time to read it. It pretty much explains exactly what is happening. But I do have the summary here, which I'm going to read out to get you up to speed. And then we're going to look at what you can do about it to make sure you profit in the market and why this is actually leading to a shift of the narrative here that is definitely presenting some amazing opportunities. So the summary of Cobie's article is, the FTV meta has shifted since it began. Returns for public have diminished over time comparing ETH Sol Stark public returns on buying at the lowest possible price available. Now this is the point he's making. If you look at ETH, the initial sale valuation was at 26 million, which basically enabled people to get in at 35 million, obviously before it ran into the hundreds of billions in terms of market cap. Solana had its initial sale at 20. Its cheapest ever FTV on the open market was 240 mil, and its market cap at the time was 4 million. Optimism launched at a valuation of 1.7 bill. Its market cap at the time was 95 mil. These are some of the previous launches which have been extremely successful in the market. Part of the reason why they were so successful in the market is because investors were able to buy into Sol super cheap, buy into ETH super cheap, buy into Optimism super cheap. And by getting in low, as price starts pumping, you build this loyal community. You build momentum via having more bag holders actually holding the token, which in turn makes it more decentralized, but also makes the price more resilient as the price goes up. You can contrast this to some of the newer launches like Stark, which really contextualizes the issue at hand that we're discussing today, where the initial sale valuation was at 80 million. So this means that early investors got in at 80. Let me actually show you on CryptoRank, by the way, which is an amazing website for looking at fundraising and tokenomics, what actually happened with these initial fundraising rounds, because it gives you a real insight into the market. So you can see here, this is Starknet. Their initial raise was here at the 80 mil val, led by Pantera, Polychain, Vitalik, Naval, etc. They had another Series A with Paradigm, Sequoia, Pantera, raising more at a slightly higher valuation. They had their Series B with some more big name VCs. Then they had their Series C, Series D, and usually the price increases over time. But the earliest seed round for Starknet happened at the $80 million valuation. You want to know what Stark launched at? 30 billion. So you had the VCs and the early investors getting in at 80 million, and it's launching at a $30 billion FTV. Now, since then, it's been pretty much down only and is now sitting at around an 11 bill FTV with a market cap of 800 million. So the reason you call this a low float, high FTV token, by definition, is because it has a high fully diluted valuation, but proportionately, the market cap is sitting at less than 10% of the fully diluted valuation. For those who don't know what this means, it basically means all of the tokens in circulation, including all future tokens, add up at a current price of $1.10 to $11 billion. And all the current tokens, so not including future tokens, currently in circulation, add up to a total market capitalization today of 800 million. You'll see there's a major discrepancy here. So this basically creates an issue because a project like Starknet is failing to gain any sort of community because price is down only from launch. It's down only from launch because it launched at such a high valuation. And this is extremely prohibitive for retail that want to get into the token, and means it's a completely different proposition as to buying something like an ETH, Sol, or Optimism, where you're able to get in a lot cheaper on launch. And this isn't just exclusive to Starknet. This has been happening with a lot of other new VC coins in the market, as you can see in front of you, which have been down only due to the exact same effect. Continuing on with Cobie's analysis here, he says that the most upside is now in private markets, with VCs founders benefiting the most. That's true, because as we just saw, the VCs get in low and they sell high. And there's nothing wrong in principle with this, by the way, and this is something I'm going to get into slightly later with my counter arguments. VCs do have a right to make a profit if they're providing a genuine value add. I think the major argument here is that it's gone a little bit too far with a lot of these new launches. You're obviously going to have insiders, and you want the team to make money because you want them to be incentivized to build. You want the VCs to make money as well. There's just a problem when they're up 100x, 200x, 300x, and then they're purely looking to offload their position because they're up massive multiples. That's where it becomes a problem if there's major unlocks, because then price bleeds. But we'll get into that slightly later after I give you the altcoins that I want to discuss today. ICOs were good and bad. ICOs allowed ETH at a 26 mil valuation to go to 350 bill. 2021 mania shifted the game, which is now why most public tokens suck. 100% true. The reason a lot had to change their vesting schedules and follow this low float, high FDV setup is basically because of the new regulation that entered that limited the use of ICOs due to the fact that a lot of these cryptos from 2017 and 2021 could be considered securities under this model. And this is one of the best points from this article. Cobie states that low float isn't the only issue. It's the private price discovery taking place in rigged markets where VCs PvP for higher valuations. And one of the points he makes is that a lot of these VCs are actually offloading via OTC and founders offloading via OTC, which is leading to price discovery happening outside of the open market. Price discovery happening inside of the open market is a really healthy thing, and that's one of the reasons why meme coins have been some of the strongest performers. But too much price discovery happening in a closed market, in private markets, is really damaging for crypto, as oftentimes, as I mentioned, the project will just launch with a super high valuation. So what can you do? The first thing you can do, and the first thing you need to do, is when it comes to any new launch, analyze who the investors are and analyze the tokenomics to A, take into account the unlocks, and B, take into account the valuations. So what you can do is you can go into June Analytics and you can look at the VC dominance. I really do like this because it shows the dominance of a VC in terms of their ownership of the circulating supply, which gives you not a conclusive, I'll get into some of the nitty gritty slightly later, but at least a broad overview of whether a coin has too much of a weighting towards VCs or not. So you can look this up on June Analytics. I'll also leave this in the description below, which is basically a VC printer index to see if there's VCs. So what kind of coins should you be looking at instead? Because you want to avoid these coins that launch with a super high FDV, generally speaking, and you want to be getting into coins that have a little less sell pressure and generally are a bit more forgiving in terms of their unlock and vesting schedule. So what coins should you buy instead? The first answer and the first obvious retaliation to this predicament are the meme coins. And this is largely why I think meme coins have performed really well over the last few months. It's because there is a bit of pushback against VCs in the market. People do feel like the game has been rigged and they want to gain an edge. And meme coins, because a lot of them are fair launched, by the way, not all of them are fair launched because there are snipers, there are insiders that buy up, etc. So it's not always a fair launch, but at least the narrative is that they're fair launched, and still objectively, many of them are more fair launched than a lot of the other high FDV coins that are launching in the market. But the market's been gravitating to meme coins for this reason. And this gives people essentially a shot at revenge against the VCs. I also want to make it clear, I don't think VCs are the enemy here. They do play an important role in the crypto ecosystem, but I do think that when the market picks up, when you do see the market heating up, it starts to get a little bit crazy, and some of the inner greed definitely comes out from a lot of these VCs and investors, which does result in some questionable decisions when it comes to issuing tokenomics. So meme coins are definitely a clear trend against this. And the good thing about memes is that they're often fully diluted, meaning there's no sell pressure, there's no suppression. And that means that when price starts to run, because there's no sell pressure, they can run really hard. And that's what we've seen across coins like WIF, Bonk, and PEPE this year. By the way, if you didn't catch the PEPE trade, but you're still interested in getting your hands on some free PEPE, I do have a promotion right now live in partnership with BloFin, where the first 300 users are going to get 800,000 PEPE airdrop to their wallets for free just for signing up to a new BloFin account using the description below and depositing more than $100 over the duration of the campaign period. So if you're interested in that, there is a link in the description to claim your PEPE bonus. I did check, we're not quite at the 300 user mark yet, so you still have time to get involved. But not only that, after you claim your free PEPE bonus, or even if you don't claim it and you just want to go for the lucky wheel, you have a chance to spin the lucky wheel to win up to 50 million PEPE. So basically, you can earn entries. Every time you earn an entry, it gives you a spin to win 50 mil, 20 mil, 10 mil, 8 mil, 5 mil, 1 mil, 500K. You might not even win anything, but you can win up to 50 million PEPE just by spinning the wheel. How do you get entries? Well, you can get unlimited entries just by building up trading volume on the exchange. So it's super simple. For every $10,000 in futures volume, you will get one ticket to spin the lucky wheel, and you can spin it as many times as you want. And obviously that campaign is happening together with the deposit bonus, which can get you 800,000 PEPE. So to access that, you've got to use the link in the description below, and the rewards will be distributed at the end of the campaign period in 8 days. So you still do have time to sign up, and in 8 days you will get your rewards for participating. So going on from the meme coin point, they're obviously an obvious retaliation to this low float, high FDV trend. What other tokens should you be looking at in the market which are basically fully diluted and have equally good narratives? Well, I've broken it down into 8 tokens, which I'm bullish on, that I want to share with you now. I'll briefly discuss each of them and why I think in this market they're a solid proposition given the way their tokenomics are structured. And then I'm going to look at some counterpoints because yes, it is clear that the current model isn't working, but the solution is a little bit different to what you may think. And I still think there are some outliers which, even though they're low float, high FDV, can still perform very well. And I'm going to get into that counterpoint after, of course, we go into the altcoins, which clearly fit this narrative of not having much dilution, have a lack of sell pressure coming onto the market from these unlocks, and generally, I think, should be favored over some of these other tokens in the market for that reason. And a lot of these tokens actually are tokens that were launched in 2021, and the majority of their sell pressure is flushed out. So this is a major tip for you. In the market, look for coins, especially during this period whilst this trend is starting to kick up. Look for coins that were launched, let's say in 2021, 2022, they had their 2-year vesting schedules hitting the market during the bear. They got absolutely smoked, but now the unlocks are running out. And as we get into a hotter market, there's less sell pressure, so these tokens can fly a lot quicker and harder than the tokens with a bunch of unlocks suppressing price. Solana is obviously the first clear one. I don't need to go too much into this, but it's one of the leaders in the market for a reason. I've talked about it a lot, and I called Solana at $14 on the Twitter and on the channel. So congrats to everyone that's gotten on board the Solana train with me as well. It's been amazing, and it's climbed to be one of my biggest holdings due to its outperformance. The next one is TON. It's another layer 1, which, okay, it's relatively highly valued, but it's not a 30 bill valuation with a 5 bill circulating market cap. The FDV ratio is actually 68%, so it's mostly diluted in the market, which is good. The next one is NEAR. This fits the AI narrative. It comes in at a whopping 91% fully diluted, which means there isn't much sell pressure. And I do think NEAR is one of the top L1s, especially acting as a very strong AI proxy because the founder Ilya has his roots in AI, and I do expect some implementations there to hit in the future, as well as the fact that I genuinely like what they're building and their technology is super strong. The next one's Injective. Injective actually has a 94% market cap to FDV ratio, which is really impressive, and is one that outperformed earlier in the year, but it's now started to just stagnate a little bit. I think at some point this is definitely going to rear its head again as a narrative, and is one over this next few months that I'm looking at accumulating. The next one is Arweave. I've said many times that this is one of my top deep-in/storage plays. It's not actually AI, but they do have their supercomputer, I guess, which has AI implementation. But the supercomputer is really strong. It positions Arweave as one of the top infrastructure plays. And it's still not a crazy FDV at 3.1, considering it has a 100% circulating market cap, which means all of the unlocks have taken place. And that's what we're looking for now in this market when it comes to investing, especially during this period. Another one with pretty much 100% unlocked is AIOZ. It's another coin in the DeepIn/AI sector. It also has decentralized storage, but also its decentralized AI compute network. This is another one that I like that is fully diluted in the market. Getting on to the final two now, and then we're going to go through some counterpoints and look at some tokens which can still perform well in the face of a narrative which is clearly shifting towards these coins that are fully diluted. The next one is WIF, because meme coins are meme coins. We discussed this before. They typically launch in a slightly fairer manner, and obviously having them fully diluted is a plus in terms of price. WIF actually has taken a big hit. I am becoming more interested the lower it goes at starting to stack more aggressively. WIF and the next one, which is PEPE, which is another leading meme coin in my opinion. Very healthy cool off, and one that I'm welcoming as someone that would like to get more exposure, especially to WIF, because I am up a 40x on PEPE, not a net 40x because I've made purchases since my initial buy, so maybe net I'm up 10 to 15x, but I'm still looking at accumulating more as I've sold some off along the way. So dips are very welcome in this market, and you got to remember that motto of buying extreme fear and selling extreme greed to take profits on positions that you're extremely up on. So this spreadsheet is some of my top picks that I like across a variety of sectors, so AI, DeepIn, meme coins, infra, etc., that mostly are fully diluted, and there are many more, and you can look for this simply by going onto CoinGecko and comparing the market cap to the fully diluted market cap. So if you click on a coin, let's say Dogecoin, for example, you'll see this come up on CoinGecko or CoinMarketCap. Doge in this example is mostly fully diluted in the market. And Ansem points out that he does think there is a meta building here. He says he can already hear traders making lists of liquid tokens from last cycle that are already vested and fair launch high float coins. I give it a few days before the new think pieces with tickers attached hit the timeline. I do think this is going to be a trend over the next few weeks. So there's definitely a shorter term meta in terms of these fair launch high float coins. I think that does bode well for meme coins and other coins that are largely distributed in the market. But I don't think that's the be all and end all for low float high FDV. I've got a few counterpoints because I don't think it's as clear cut as some people are making out. And these counterpoints are very, very, very important for understanding the market dynamics at play here. Because if you take everything at face value and say, okay, I'm just not investing in anything new because if it's got a low float and high FDV, I don't want anything to do with it. I think you may be missing out on some potential opportunities to make money, because the key here is not whether a coin is low float, high FDV. It's where and when the unlocks are occurring. Those are the two most important factors here when it comes to evaluating alts, and I'm going to show you exactly how to do it. But firstly, what are some of my counterpoints to this Cobie article / some of the common tropes that I'm now seeing regarding low float, high FTV? Well, the first thing is, okay, fair launches sound great in practice, right? Meaning you just launch it to the market or you dump 100% of the tokens day one and the market does price discovery. That sounds great. But the reality is there are real people building these products. There are real people that spend real time and real resources building infrastructure products. And these teams need to be incentivized to make these projects succeed. Look, as much as you might tell yourself that the market's decentralized, the reality is it still is the people behind these coins, the teams behind these coins that are pulling the strings, shipping the updates, and making these projects a success. Now, if teams can exit all of their liquidity day one, let's say you do unlock 100% day one, A, this adds a lot of sell pressure to the chart on day one, which isn't good for early price action, which is very important when it comes to tokens. But B, then the team isn't incentivized long-term. The teams have to be incentivized long-term to keep building, keep shipping, keep innovating. If they have 100% of their supply unlocked, this doesn't bode very well for the incentive alignment of the project. And you could say the same for the VCs, the same thing for the KOLs that get in via the KOL round, the same thing for any early stage investor that's a strategic value add, whether it be on the building side, the dev side, or the marketing side. The next point I want to make is that if you want to actually build good tech, you need to raise capital. So a 100% fair launch, although it sounds great, does this really offer the ability for early investors to make any sort of profit? Is this really the optimal approach considering you're going to need to raise? Some of these projects take 30, 50, 100, 200, 500 million even dollars worth of capital to build. You need to hire devs from universities, like top MIT graduates, etc. You need to hire marketing. You need to hire all the pieces to make a project possible. That requires a lot of expenditure. These early stage investors need to be able to make some sort of profit. Now, maybe raising at 80 and then launching at 30 bill is exploitative 100%, but they need to make some profit. Otherwise, this model isn't sustainable and you won't be able to build good tech. You're not going to be able to incentivize the best developers. You're not going to be able to get the best VCs to be incentivized. Even the creators, you're not going to be able to incentivize them to make content. There are issues when you start to play too much into the fair launch category for infra stuff. Now, for meme coins, 100%. For certain tokens, 100%. But not all tokens are cut out for this, and there is nuance here. The other bit of nuance is, look, everyone's saying, oh, we should go back to the ETH IDO model. I'm missing the fact that in 2024, ICOs are considered, by and large, a security if you are issuing tokens in exchange for capital. It's not possible. There's too many requirements, especially if you're in the US with KYC, etc. It's a regulatory nightmare and you run the risk of your token being labeled a security. That model doesn't work. Now, I do think there is a middle ground where you can potentially create your own launch pad, have KYC implemented, leverage other technology that can issue these tokens and thus give up a larger percentage of supply to these launch pads, or just do a bigger airdrop, etc. There are definitely ways to do it, and I think teams are going to have to make these tweaks, but tweaking it too much is an issue. So I think there's a little bit of a middle ground. Should it be 5% on launch and a bunch of insiders dumping? No. But should it be 100% fair launch, all the tokens released on day one? No. There needs to be a middle ground, and where the tokens are distributed is extremely important. So it's up to you to work out where the source of the unlocks are before investing. I believe that looking into tokenomics, where the tokens are going and when the tokens are being released, is the most plus EV thing you can do before investing. Because you're going to be putting real money into these projects, but only spending maybe 20 to 30 minutes worth of due diligence at most to work out whether a project has good tokenomics. So to understand tokenomics a little bit better and follow on from this point, let's look at some examples of low float, high FTV coins that actually presented a decent trading opportunity, and I'll help you understand why. The first one is Ondo. Ondo is by definition low float, high FTV. At the time of launching, it was around 10% float. That is considered low float, and the FTV is high. It wasn't as high on launching, but it was still around $1 billion. Now, at face value, you might be confused because this token is reaching all-time highs and has been pumping despite having a high FTV and a low float. Why is this the case? Well, it's because most VCs and insiders were locked for 1 year. If you went onto their vesting schedule, you would see the Ondo unlocked token distribution. You can view this on CryptoRank if you have a premium account. You can also view this on token unlocks. So this information is public. You can see here the vesting schedule for the various sales. CryptoRank is an amazing website. I really recommend using it. But what you'll notice here, if you do look at Ondo, is that a lot of these investors have at least a 1 year lock. So you can see protocol development, which is 33%, which is where a lot of the insiders would have invested, has a cliff of 1 year, which puts the unlock in January 2025 until 2028. This means that there is minimal sell pressure on the token until 2025. Now in 2025, will the token dump? I mean, there are a lot of factors at play, whether you think it's priced in or not, but look, you can make that argument. But 2025 is still 7-8 months away. So in the interim, there was a trade here. So if you sat back and looked at Ondo and said, oh no, it's low float high FDV on day one and didn't get in, even though it was the leading RWA play, that's a mistake if you didn't look into the tokenomics. Because if you did, you'd realize there was a large cliff and there was no sell pressure for a year. So what happens later is a different story. Now, I want to be very clear that I was an early investor in Ondo, and I have been receiving some of my unlocks. So there were some strategic investors that did receive some unlocks, but the majority of unlocks on the protocol development side weren't until 2025. I also want to take a look at Celestia. This is another example. Now, is the way that Celestia raised completely optimal in my opinion? No. I even think this is one of the examples that Cobie may have been alluding to in his article. But one can't deny that the early run-up in terms of price action was super impressive. It had a good airdrop, so they executed their airdrop very well. It was a strong narrative, strong trend, and it launched low enough to allow that 10x price discovery on launch. Since then, there has been a drop in price. Some of the sell pressure has started to hit the market, but it did have that initial run-up in the early days where many of the tokens weren't unlocked and the price was able to perform super strongly. Once again, you can check the vesting schedule on CryptoRank or token unlocks. Another example is Spectral. This is a token which has been running over the past couple of weeks. It's one that I actually called in my Discord, and we're already up, I think, around 30%. You can see I did post it here when it was $9. And this has been running because AI is a super strong narrative. It's from a hot sector, and the major unlocks aren't until November. So there still is this 5 to 6 month period whilst AI is hot where there is no unlock. So do you start to understand the nuance here? It's not always wise to completely fade a token just because you see the low float high FDV. In fact, these tokens can often be the best performers. Now, is it the most optimal from a fair launch perspective? Not always, but can the token still pump? Absolutely. There is one more model that I want to share with you, and this is Deepin. So WMT is a token that I've recently become interested in. Over the last few months, it's been performing really strongly, and this is off the back of some major updates which are coming to the protocol. I recently did take a position in WMT. I'm bullish on it in the Deepin sector, but once again, you could look at the FDV and say, oh, damn, more than half of the tokens aren't actually unlocked. This is bad. This means I'm going to get dumped on. But you've also got to look where the tokens are coming from, because in the case of Deepin literally cannot survive without sustainable mechanisms to incentivize people to stake and run nodes. So with Deepin, often how it works is you run a node and you get tokens for running a node. If a project does a 100% fair launch on day one, there's no tokens left to distribute to the stakeholders of the network for running nodes. Then the entire Deepin flywheel goes to zero. There is no flywheel because there's no one staking, because no one can stake, because there's no incentive to stake. So with coins like, WMT in Deepin, Render in Deepin, Aether, which is an upcoming protocol, you actually need some of these tokens coming a bit later to incentivize network participants. So that is why the number one thing you have to look at is where the tokens are going. Because if tokens aren't just going to VCs and it's going to the ecosystem to incentivize stakeholders, that can actually be a real positive for the network and price can still perform well. Whereas if, let's say, that remaining 50% of tokens is going straight to early investors that are already up at 100x, and you verify this by looking at CryptoRank, then that's more of a problem. So don't be so quick just to look at a token and be like, oh, it's a high float, low FDV, it's going to zero, like some of these other tokens have just been bleeding and bleeding and bleeding. You've got to look at where the tokens are going towards. Who are the tokens going to? What are the unlocks being used for? There is a lot of nuance here. And I just want to make sure people don't fall into the trap. To summarize, I do think there is a narrative now starting to build with tokens that are a little bit more fair launch. I also do think there is going to be a shift in the market because there is now a lot of noise about it in terms of how these tokens launch. And I do also believe the current model, a lot of the time, is slightly predatory at worst and a little bit cheeky at best. So I do think there needs to be a change. And I think this is actually a positive for the founders. Why? Because if the community has an opportunity to get in earlier, you're creating a more loyal community, and in turn, your protocol has more longevity, and then the team unlocks later down the track are going to be worth more. So why be so short-minded in terms of wanting to get some cash now when later you're going to be making much more money if your protocol succeeds and you've built a community? So oftentimes it ends up canceling out, the effect of taking your money sooner. But I could rant and rave, about this for a long time. So I've shown you some of the low float tokens that I'm interested in. I've also provided you some counterpoints. And at the end of the day, the number one lesson you got to take away here is work out where the source of the unlocks are and when those unlocks are happening before you invest in any protocol. It's on CryptoRank, it's on Token Unlock. It's often also in their white paper. There is all of this information available for you. Sometimes you got to dig a little bit. They sometimes can make it tricky, but there are tools out there, as I just showed you, that can actually help you. And I'm going to link some of these websites in the description. So the June Analytics VC tracker, the CryptoRank website, alongside the Cobie report, because I think it's great reading if you're interested in this subject. I do believe this maybe was one of the most impactful videos I've uploaded in a while. So if you did enjoy it, make sure you do smash the like button and subscribe if you aren't already. There's links in the description to the Mars High Club if you want to sign up. There's only 5 days left to join the wait list. It is approaching almost being full, so you'll probably want to get in quick if you're interested in joining that community. And there's also a link for the PEPE lucky spin alongside the 800,000 deposit bonus. I'm going to see you in the next one. Have a lovely rest of your day. Peace.